The stock market is rigged. You can still make money, but you need to know when to get in and when to get out. The market makers, hedge funds, and fund managers are playing by a different set of rules. They trade securities in dark pools inaccessible to individuals. They have more information, faster trading executions, and powerful algorithms all working on their behalf. Investing and trading doesn't have to be difficult. With the right tools and information, you can beat the street. Take advantage of our upcoming pre-launch event and be one of the first to access these tools. Watch this video to learn about our analysis, and then sign up at conquerwallstreet.com for all the pre-launch details. Welcome to Conquer Wall Street. First things first, I am not a financial advisor, and this video is for educational and informational purposes only. Let's get right to the charts. Yes, we finally have a week of stock market gains. It's been a long time since we've been able to say that. First, we have the Dow Jones Industrial Average, which was finally up 5.49% this week. The S&P 500 was also up 6.46%, and the NASDAQ completes the trifecta, finishing with a gain of 4.37% this week. As for the dominant cryptocurrency tokens, Bitcoin is currently up 3.6% for the week, and Ethereum is looking at a big gain of 9.82% for the week. So, what's moving the stock and crypto markets this week? On Monday, the focus was on the housing market. To the surprise of no one, experts are predicting that housing prices may start to cool off with the rise in interest rates. There's a part of me that hopes housing cools off a bit, as many families have been feeling priced out of the market. But on the downside, this influences markets. Should the combination of rising rates and inflation push us into a recession, it would put significantly more downside pressure on housing prices. For many people, much of their wealth is wrapped up in their home's equity. And when home and asset values fall, people spend less. Early this week, stocks jumped after recording their worst weekly declines in 2 years. But if you've been following this channel, you're not surprised. I stated in last week's market analysis video that we're set up for a bounce. And a bounce we got with the Dow Jones Industrial Average up 2.2% on Monday. So, is the bear market over? Definitely not. I'll talk more about the market's technical take later in this video. Tuesday had perma-bear Jim Rogers warning that we could be headed to the worst bear market of his lifetime. I don't know how many of you know who Jim Rogers is, but I've followed him for decades, and I've never heard him make anything but ridiculously bearish statements. But this time, he might be right. If global macroeconomics don't start looking more favorable soon, I fear this bear market could intensify. And on Wednesday, Fed Reserve Chair Jerome Powell stated that he will continue to keep rising interest rates, or he will continue to keep raising interest rates as long as appropriate. If you've been following me, you know that rapidly rising interest rates negatively affect the valuation multiples of stocks. As investors, we need to closely watch the inflation data and Powell's response. But don't make investment decisions based on what Powell says. Make decisions based on what he does. For example, Powell stated that he could slow rate increases should we slip into a recession. This is just political banter. He's talking up the stock market. Watch what he actually does with rates, not what he says. And finally, Deutsche Bank and other financial institutions are coming out with warnings that there's a 50% chance that interest rate hikes will cause a recession. Yes, the analysis are late to the party again. These experts couldn't figure this out until after the S&P 500 lost 20% from its most recent high, and the CPI data showed inflation at a 41-year high. I'm sure most retail investors and traders would have loved this information before this week. On to the crypto market news. Do Kwon of Terra Luna comes out stating that he is no fraudster and that he has great confidence in the launch of Terra 2.0. If you're not in the know, Terra Luna and its stablecoin UST were completely destroyed, causing many early investors to lose all of their money in these projects. Will Terra Luna 2.0 survive, or will it have the same fate as Terra Luna Classic? Time will tell, but for me personally, this project is one that I will avoid. And next we have Solana Labs planning to release a Web3 smartphone sometime early next year. This is something I find interesting, and I hope this is a success. Current smartphones are centralized and void of all privacy. Should Solana smartphones provide privacy, decentralization, and similar functionality to its Web 2.0 competitors, I'd most likely be a buyer. And with my final piece of crypto news, we have ProShares set to launch the first US short Bitcoin ETF on June 21st. This is big news because we still don't have a spot Bitcoin ETF. You can be long Bitcoin via futures-based ETF, and now you can do the same on the short side. Then why are we still waiting for a spot ETF? I have my market manipulation theories, but I'll save that for a different video. So, what are my thoughts on the stock and crypto markets? Last week I said we were due for an oversold bounce. We got the bounce. So how did I know we were going to get this bounce? The market system is set up to cause novice investors and traders the most pain. Markets were deeply oversold. Retail traders are short. This is a recipe for a short squeeze. Think about it. Last week we had the worst weekly market decline in 2 years. I'm still beating the same drum. The bear market isn't over. Remember, the CPI data, the job market is showing signs of slowing down, and we have high inflation and consumer confidence is low. Can we bounce higher? Yes, but until the macro picture looks better, I expect more downside. As for crypto, we also got a small bounce, but for most of the crypto projects, it was really unremarkable. And my followers know I'm looking for Bitcoin to lead us higher as a sign that the bear market might be coming to an end. We didn't get that. Bitcoin was up 3.6%. The bear continues to roar. Let's go to the charts. Starting with the S&P 500 chart, we got that bounce I was calling for. My target on the SPY ETF was the 385 area, which I said last week should line up nicely with the 20-day exponential moving average. Look at the chart. Today we closed at 390. We got a sharp bounce off the lows. A pullback with a higher low would be a healthy setup, but with the amount of shorts in the market, we might shoot higher. Look at the chart of the put-call ratio. We're still at high levels. I've added a 50-day moving average to the chart. Look at the trend. It's up. Now look at the VIX. Another break below 30, but the trend is still up. My gut tells me we will continue higher in the short term. The next target I'm looking for on the SPY is the 400 to 405 level on the SPY ETF, which lines up with the downtrend and is near the 50-day moving average. So what's hot and what's not with the stock market? Energy wasn't a dominant sector this week, but my subscribers shouldn't be surprised. Look at this chart. Last week, I pointed out how far energy was above its long-term trend line. I'm still bullish on energy as long as prices stay high. Should prices break below this dominant trend, the bullish argument may be in jeopardy. We were also watching the materials sector last week. The XLB Materials ETF was a top performer this week, but recall, last week we pointed out that this sector just put in a bearish weekly head and shoulders pattern. I remain cautious. As always, if there's interest in more of a sector breakdown analysis, let me know in the comments and I'll try to make a video on your topic. Let's move on to cryptocurrency. Crypto charts continue to look bad, and we're looking to Bitcoin to lead us out of the bear market. As I've said before, where Bitcoin goes, altcoins follow. Full disclosure, to my followers, I'm a long-term bull on Bitcoin, and I'm a dollar cost averager into the asset, but I'm selective about my purchases, the timing of these purchases, and the size of each purchase. If you're interested in what I'm doing in the stock and crypto markets, or just want to learn before you earn, sign up for the pre-launch of my membership community at conquerwallstreet.com. There, you can gain access to my best market analysis, model portfolios, and interact directly with me. Remember, I'll never solicit you in the comments below. On this channel, we've been discussing the 200-week moving average as significant long-term support for Bitcoin. Look at this chart. Bitcoin is below its 200-week simple moving average. This level of support has failed. We've also been monitoring the weekly RSI, which has historically given excellent buy signals when the RSI closes below and back above the 30 level. We're currently below 30 and watching for a cross above. That said, I have low confidence in this providing a good buy signal. For the reasons discussed earlier, investable assets are in risk-off mode. Until macro fundamentals look better, Bitcoin remains the ultimate risk-off asset. For me personally, I remain on the sidelines and will not be buying Bitcoin until these charts look better. So what's hot and what's not in the crypto markets? This week, all 20 market cap leaders, excluding stablecoins that we track, were positive. That said, please note that crypto trades 24 hours a day, so you might have slightly different weekly averages than those on my spreadsheet. It all depends on your platform and when you check your data. Big winners this week were Polygon, Shiba Inu, and Uniswap. Taking a closer look at the charts, Polygon put in what looks to be a double bottom near its all-time low. On to Shiba Inu, my favorite meme coin. Last few weeks, I've been discussing Shiba adding a fifth zero to its price. We got that, followed by a massive weekly bounce of plus 30%. If you recall, I pointed out Shiba's support zone as the place I'm looking for a bounce, but not before it adds a fifth zero to its price. Uniswap, like Shiba, was approaching a long-term support level. Buyers showed up, giving Uniswap gains of plus 30%. Ethereum, like Bitcoin, is fighting to regain its 200-week moving average. This is worth monitoring. Ethereum bulls are keeping an eye on the progress of the upcoming ETH 2.0 merge. This could be a catalyst. Solana was another cryptocurrency with long-term support approaching. I was looking for Solana to test support at the $28 level. We got there and had a nice bounce. Thanks so much for watching. Let us know in the comments below what you thought of the video and what analysis and information would be most helpful to you in the future. And as always, don't forget to hit the like and subscribe buttons and give us a visit at conquerwallstreet.com, where you can get access to all my best tools and analysis.